Something big just happened in the world of Bitcoin. A publicly traded company backed by the Trump family has quietly crossed a major milestone: 6,000 Bitcoin in its treasury. That's over $400 million worth of BTC sitting on one corporate balance sheet. And this isn't just another company buying Bitcoin. This could be a signal of a much larger shift happening at the highest levels of government and finance. The 6,000 Bitcoin milestone. As of February 2026, American Bitcoin Corp, trading under the ticker ABTC, has crossed 6,000 Bitcoin in total holdings. The confirmed number is around 6,060 BTC. At current prices, that puts the value between $400 and $425 million. And that achievement places the company among the top 20 largest corporate Bitcoin holders in the entire world. But here's what makes this even more interesting. Just 5 months ago, when the company debuted on the NASDAQ in September 2025, it held roughly 4,000 Bitcoin. In only 5 months, the company increased its Bitcoin treasury by more than 100%. That's a 116% Bitcoin yield. In simple terms, they almost doubled their holdings in less than half a year. How did they do it? This wasn't luck. It was strategy. American Bitcoin Corp is built on a model called mining to treasury. Instead of simply buying Bitcoin on the open market, they mine it. At industrial scale, the company operates massive mining facilities. One of them, called the Vega Data Center, is reportedly the size of 5 football fields. These facilities produce between 8 and 10 Bitcoin per day. And here's the key detail. They mine Bitcoin at roughly half the cost of buying it on the open market. So while other companies are paying full market price, ABTC is effectively creating Bitcoin at a discount. Mining and buying. But mining is only half the strategy. The company also buys Bitcoin directly from the market. For example, in just 18 days leading up to the 6,000 BTC milestone, they acquired 196 Bitcoin through direct purchases. They also receive steady transfers from a partner called Foundry Digital. So the model is simple but powerful. Mine Bitcoin cheaply, buy more when it makes sense, and send it all to the treasury, not to sell, but to hold. The origin story. And believe it or not, this entire company started with a pizza dinner. In February 2025, Eric Trump met with Asher Ganoot, the CEO of Hut 8, a major Canadian Bitcoin mining company. During that dinner, the idea was born. What if they created a new entity, focused not just on mining, but on building a massive Bitcoin treasury? The result was American Bitcoin Corp. Hut 8 spun off its mining operations into this new company. And the ownership structure looks like this. Hut 8 owns 80%. The Trump family's entity, American Data Centers, owns 20%. Together, they created a company with one primary mission: accumulate as much Bitcoin as possible. The financial results. And so far, the numbers are moving in the right direction. In the third quarter of 2025, revenue surged to $64 million. That's up from just $1 million the year before. Gross margin hit 56%. And the company reported a net profit of $3.5 million. Just 1 year earlier, it posted a loss of $600,000. It's a dramatic turnaround in a very short period of time. But this is bigger than one. Company American Bitcoin Corp is not an isolated case. It's part of a much larger crypto ecosystem connected to the Trump family. And that ecosystem has been expanding rapidly. There's World Liberty Financial, a crypto venture that launched its own token in September 2025. There were meme coins launched just before the inauguration in January 2025. Then came the stablecoin push. In July 2025, the so-called Genius Act opened the door for banks and non-banks to issue stablecoins. And perhaps the most important move of all? In March 2025, an executive order formalized the U.S. government's Bitcoin holdings. Roughly 200,000 Bitcoin, taken from seizures over the years, were officially declared a strategic reserve asset. Some officials even called it a digital Fort Knox, a major regulatory shift. At the same time, the regulatory climate around crypto has softened. SEC enforcement has slowed down. The Department of Justice disbanded its crypto enforcement team, and banks no longer need special permission to engage in crypto activities. In other words, the environment has become much more friendly to Bitcoin and digital assets, and companies like ABTC are taking advantage of that shift. But not everyone is comfortable. Of course, this situation has raised serious concerns. Ethics watchdogs and lawmakers have warned about potential conflicts of interest, because this is a president's family running crypto businesses, while the administration is shaping crypto policy. Some lawmakers have already raised alarms about the situation. They argue that the overlap between political power and private crypto ventures creates uncomfortable questions. And that's where things start to get complicated. Because while institutional adoption is accelerating, there are also risks, controversies, and market volatility that investors can't ignore. So we've covered the milestone, 6,000 Bitcoin. over $400 million in treasury, a mining machine producing 8 to 10 BTC per day. But now we need to talk about what this really means, because this isn't just about one company. This is about the collision between political power, regulatory change, and aggressive Bitcoin accumulation. And that collision could permanently reshape America's relationship with crypto. The criticisms are real. Let's start with the uncomfortable part. When a president's family runs a crypto company while the administration sets crypto policy, people ask questions. Lawmakers and ethics watchdogs have already raised concerns about potential conflicts of interest. Critics argue that regulatory softening, policy shifts, and executive actions could directly benefit private crypto ventures connected to political insiders. And that perception alone can create controversy. There was also scrutiny around a financing deal with Bitmain, a major Chinese mining equipment manufacturer. Observers pointed out that some of the terms appeared unusual: long redemption windows, mining arrangements at a discount. Nothing illegal has been proven, but in an environment where politics and capital intersect, optics matter. The volatility factor. Then there's the market risk. Despite growing its Bitcoin treasury, ABTC stock has been volatile. It is down roughly 11 to 12% year-to-date in early 2026, and its 52-week range has been extreme, from just 63 cents to nearly $15. That's not stability, that's leverage. Because when a company's primary asset is Bitcoin, its stock becomes a leveraged bet on Bitcoin's price. And Bitcoin itself has been volatile. It dropped from around $110,000 in May 2025 to nearly $63,000 in early 2026. Meanwhile, corporations are buying, governments are holding, ETFs are accumulating, and retail demand remains strong. When institutional buyers remove supply from circulation, it tightens the market, and that's where the scarcity thesis comes into play. The competitive position. At its current pace, 8 to 10 Bitcoin per day, ABTC could potentially reach 9 to 10,000 Bitcoin by the end of 2026. That would move it even higher on the list of corporate holders. It's already closing in on firms like Galaxy Digital, which holds roughly 6,900 BTC. If accumulation continues, ABTC could surpass them, and that's not just symbolic. Rank matters in capital markets. Perception matters. Being seen as a top Bitcoin treasury company can attract capital. Legislative catalysts ahead. There are also potential legislative catalysts on the horizon. Efforts are underway to codify the strategic Bitcoin reserve into formal law, and broader crypto market structure bills are moving through the Senate. If passed, they could provide clearer rules for digital assets. Clarity reduces uncertainty, and reduced uncertainty often attracts capital. The bigger picture. Step back from the daily volatility and the political headlines. What's happening here is structural. For the first time in history, a U.S. administration has formally recognized Bitcoin as a reserve asset. A president's family is running a public Bitcoin company. Regulatory pressure has eased significantly. Banks are entering crypto without seeking special permission, and corporations are racing to build Bitcoin treasuries. That's not random. That's a coordinated shift toward digital asset integration. The risk reminder. But let's be clear, this is not risk-free. Corporate Bitcoin treasuries amplify gains when Bitcoin rises and amplify losses when Bitcoin falls. ABTC stock is not Bitcoin. It's a leveraged equity exposed to Bitcoin price swings, mining costs, regulatory changes, and political dynamics. It's high risk, high volatility, high potential reward, and high potential downside. The final verdict. The 6,000 Bitcoin milestone is not just a headline. It's a signal. It confirms that institutional adoption is accelerating. It confirms that political power and crypto infrastructure are intersecting. And it confirms that Bitcoin is no longer an outsider asset. It's being integrated into the highest levels of finance and government. We are watching a new financial architecture take shape in real time. One where digital assets sit alongside traditional reserves, one where corporations compete to accumulate scarcity, one where politics, policy, and private capital are deeply intertwined. For investors, the message is clear. Adoption is real. Momentum is building. But volatility and controversy remain part of the landscape. The opportunity is significant. The risks are equally real. And the transformation is still unfolding. The question now is simple. Are we witnessing the early stages of Bitcoin becoming a permanent pillar of the American financial system, or just the beginning of a very volatile chapter? Time and the market will decide.